Would you explain to me how the dollar will change once we lock in $1.4 and $1.5 trillion deficits? What would you anticipate will be the dollar that will greet Mr. Kudlow and the president once we get those estimates?
Yeah, first of all, when you talk about a strong US dollar, I guess the US administration has a medium to long-term perspective into this. And you have seen that in yesterday's market reaction, dollar-yen went offered after the commentary, and the market is quite right in assessing what those words of US dollar strength mean. They put that into a context, and the context is the growth potential of the US economy. So what America wants to have is to increase the potential of growth. Now, if they are successful in that, and that still needs to be seen, then you can have a stronger US dollar. But then how do you achieve a better growth potential? We have already mentioned the taxes, the fiscal policy, structural reform, but you have as well to consider the exchange rate, helping that at least for the interim period. And I think this type of combination is going to keep the US dollar weak for now. But we have as well to consider one thing, and in my FX Mornings this Thursday, I wrote about the divergence you see between leading indicators and what you have in the yield curve in the US, and why this divergence is playing out. And I think they have the leading indicator suggesting belief in the fiscal impulse and the deregulation, while the yield curve is pointing into the opposite direction, simply because there is still a glut of European and Asian savings. It is about this glut of Asian savings and European savings which we have to reduce.